Hello and welcome. This is Bloomberg Queen Stocks to Watch. This is where we take you through three stocks or sectors, which are in the news and discuss them with our experts on the show. Well, today we're going to talk about Infosys, and of course we're also going to talk about GAIL. Along with that, we will be addressing Manappuram Finance and Muthoot Finance together as a gold loan companies which are in focus on the back of news. And to take us through these stocks, we are in conversation with Avinash Gorakshakar. He's a director of research at Profit Mart Securities. Before I get across to Avinash, let me take up the first stock that is in focus, and that's Infosys. Now, we've had earnings yesterday. While the revenues were largely in line, slightly ahead of expectations, the real positive surprise here was the margins, the operating margins, because we saw an expansion against an expectation of contraction in margins. The second big surprise was perhaps expected, not really a surprise, that the company eventually resumed its guidance provision. So it's guided for 2% growth in FY21, and the operating margins projected at 21 to 23%. So these are the two factors that are playing out positively, and in the morning so far, broking houses have remained sanguine towards Infosys. But let's get in Avinash conversation. Avinash, good morning and thanks for joining in. How are you assessing Infosys earnings and your view on this company?
Good morning, Agam. I think Infosys numbers, Agam, were much better than what the street expected. And as you rightly mentioned, I think on the EBITDA margins, I think definitely, the picture has come out much better than what most analysts were projecting. What is important is that despite the uncertainty, the management has stuck to its yearly guidance, which is quite a surprise. Not many companies have given this kind of guidance. This shows that the management is quite confident of the coming quarters. Most importantly, I would believe that despite the fact that US uncertainty would continue, margin outlook definitely is quite positive, and I think you could see the improvement, on the ADR price yesterday, and obviously in today's markets also we could see a decent bounce on the stock coming in. The markets would obviously be looking at clearer kind of more headwinds, tailwinds, from the US markets, especially in terms of new contracts and new wins from US customers. But I think overall numbers have been pretty good, and I think the markets would be quite happy to know that coming quarters would definitely be much better than what the street earlier anticipated. So I think even at these levels, I would believe, Agam, there is a decent risk reward because the stock has underperformed quite significantly earlier, and I think you could possibly see a decent amount of valuation kind of catch up with TCS, which still trades at a significant premium to Infosys.
Absolutely. There's no doubt of the fact that TCS, along with Wipro for that matter, have done better than TCS for this particular quarter. But we'll move on to the next stock that we want to discuss, and that's GAIL. Now, we understand news that provisional demand notices towards a license fee has been withdrawn by the DOT, that's the Department of Telecommunications. And, as per the latest clarification, nothing remains due to the telecom department by GAIL in the matter of the AGR. Now, there has been all sorts of speculation about whether or not GAIL will pay these AGR dues or no. But at this point in time, the positive, of course, is that it will not have to pay officially. Avinash, even if we keep this matter on the side, what's your view on GAIL as a whole in general? When it comes to this particular company.
No, I think, Agam, definitely this news flow about the provisional demand by DOT getting scrapped is definitely a very good positive surprise, because there was a hanging sword, and now I think it's very clear that GAIL will not have to pay anything. I think that removes a great amount of uncertainty on the company's cash flows, and most importantly, if you look at a operational perspective, I think GAIL has done significantly well. Most importantly, GAIL has decided that capex will be moderated considering the kind of COVID situation, but they are in a very profitable business, the pipeline business, which I think is definitely going to get scaled up in the coming years. So I think at these valuations, Agam, there's not much significant risk on the downside, and on the upside, I think in the next 1 or 2 quarters, provided the COVID situation improves, I would believe the second half would be much better. So I think it could be a decent buy for somebody who's looking at a long-term kind of portfolio acquisition, considering that pipeline business is definitely going to be scaled up, and with natural gas as a clean resource being promoted by the government, I would not be surprised that this stock could be gradually re-rated. So I think definitely, fundamentals apart, I think this uncertainty would definitely result in a good bounce today and a decent re-rating in the near
Okay. Fair enough. And finally, on to the gold finance companies. Now, we have an update from Manappuram Finance yesterday, where it says that lenders like Manappuram Finance, Muthoot Finance, and many others are continuing to roll over credit lines, and lenders have also extended additional finance to borrowers. While gold loan business remains profitable, there are the other relatively smaller segments for some of these companies like MSME lending, finance lending that has been impacted by the pandemic. But gold loan at this point in time remains profitable. Abhinav, what's the way forward on some of these gold finance companies? How are you looking at things when it comes to Manappuram Finance or Muthoot Finance for that matter?
I think Agam, clearly, the gold finance companies continue to remain in a sweet spot, and as you rightly mentioned, these companies continue to see a decent kind of growth in their disbursal and loan growth rates. The most important factor for these companies is that gold prices have been rising, and that actually helps them to maintain their LTV in a very remunerative kind of position. NIMs in the business have continuously moved up, and our sense is that both the companies, Manappuram as well as Muthoot Finance, have actually raised additional funding from other kind of funding sources, especially Muthoot, which raised a decent amount of funds from the ECB option. So I would believe that any decline should be used as an opportunity to accumulate these stocks. I would not be surprised that in FY21, despite the fact that other businesses like MSME, housing finance, microfinance could face a lot of challenging headwinds, but gold finance accounts for almost 80 to 85% of the overall loan book. So it's not going to hurt them significantly, although in a very small way. So definitely these are companies which could show a decent outperformance. I would suggest it would be better to actually look at some declines, because both these stocks have actually appreciated significantly in a volatile market, considering that gold finance companies have shown a decent kind of growth on the loan book front as well as on the profitability front. So we remain positive here.
And finally, ideas that you're catching up at this point in time?
In fact, Agam, we have an interesting idea called MSTC. This is a public sector company, which is a mini Navratna. The reason we like the company is because, the company has got a very strong e-commerce business, a trading business, and a recycling business. In fact, our sense is that the e-commerce business is now going to be the big growth driver for the company. The company, has mentioned clearly in the fourth quarter commentary that the trading business will be completely taken off from August, and the e-commerce business would be the main focus. And as far as the recycling business is concerned, I would believe that the market is keenly awaiting the vehicle scrappage policy. Once this comes, I think MSTC is going to be a very large beneficiary. So I think a decent kind of business model, a very good valuation, and I think very strong tailwinds which are expected from the recycling business. So I think one could definitely look at this, from a long-term perspective.
Okay. All right. Avinash Kodakshakar, we'll leave it at that. Thank you so much for joining us and taking us through your views on the many stocks. And on that note, it's a wrap on this segment, but there's lots more lined up. Stay tuned to Bloomberg Quint.